Disney here, and honestly, quite frankly, guys, Disney's the only thing I wanted to talk about today because it's probably one of the most important earnings reports we're going to see this week. Specifically, I wouldn't put it into the same light as, say, the Apples and the Microsofts and the Googles of the world,
Hmm.
obviously,
Hmm.
but I would put it up there with one of those top 10, top 15 type of importance from an earnings report perspective. And you know what? I was anticipating this Disney one because Disney is going through some things right now that are somewhat difficult, obviously. I mean, their parks have been shut down, their cruise lines have been shut down, movie theaters, they did not have a movie literally in theatrical release in the fourth quarter. And so there was a lot of anticipation about Disney coming in at a loss. And everybody in the world expected Disney to come in at a loss, including myself. Because again, it's hard to see Disney overcoming the loss of 53% in park revenue, which is what they saw. It was hard to see Disney showing a profit in an environment where the monthly revenue decline of the average subscription went from $5.56 to $4.03. It was hard to see Disney showing a profit when they had $2.6 billion in additional costs related to the pandemic. It was hard to see Disney showing a profit when content sales and licensing saw a 56% decline in revenue because they don't have movies, right? And so when you're talking about those traditional segments that make Disney whole, you're talking about the movie parks and the cruise lines, and you're talking about the movie theaters, and that's all what makes up those traditional segments of content sales and licensing, as well as parks, as well as Disneyland parks, and those revenues that come from those segments. Those are big time misses, and they were expected given the fact that we all know. I mean, this isn't new to anybody. Disney hasn't had a cruise in a year. Disney had zero movies in theaters in the fourth quarter, and that's one of Disney's biggest kickers. Not just in terms of movie tickets, because we all know like what are we going to do the game of who's going to have the biggest movie release this year? Because it's
Ooh.
always Disney. No,
Hmm.
it's always Disney, and they didn't have that last year. They had to go direct to video. And so there was a lot of anticipation around where Disney was going to come in at, and Wall Street had that expectation at a negative 45 cents a share. You know, taking into account the loss of revenue, the additional cost, opening up new international markets for Disneyland Plus not Disneyland Plus, although I'm sure my wife has that subscription. Disney Plus, Disney Plus, but for Disney Plus, and so it's very, very difficult for them to show a profit in that environment. And here's Disney saying, "Hold my beer and watch this," because they came in at 32 cents EPS number, a massive, massive beat. If they came in profitable, I was going to be like, fantastic, Disney. You know what? And even if they did come in negative, I was going to be like, you know what? It's completely understandable that Disney doesn't show a profit in this environment. And yet Disney said, no, our streaming, this is the power of Disney Plus and Disney's direct to customer acquisition and sales funnel. They nailed Disney Plus. They nailed direct to market customer 90. Let me give you the numbers very quickly, guys. Disney Plus comes in at 95 million paid subscribers. Now, reason that we bring up that number here today is Disney's acquisition of all these customers was done through a lot of partnership agreements that came with free time. And
Hmm.
they're not, and this is so important because we're seeing Disney's sales funnel have massive conversion rates. And that massive conversion rate is so important to hit those metrics that Wall Street now craves. And that's in the 230 to 260 million subscribers on Disney Plus and its Hulu, ESPN Plus, all its direct to market customer business. And so you got to like their sales funnel. You got to like the conversion. They added an additional 8 million subscribers in the quarter. That 95 million subscriber was about 5 million above the analyst expectations on Wall Street. And so a big beat in subscription revenue there. and I mentioned that the average decline in the average subscription did drop from the $5.56 to the $4.03, but that was mainly due to two massive openings in the international markets. And once again, as Disney's doing this, what do? They attach free time for months. If you have this partner agreement, if you have Verizon, if you have this, and then it goes through the customer acquisition to where they become paid. And so if you discount that in the international market, Disney's coming in right close to where they were at the $5.50 level for the average subscription. You got to like that as well. And again, conversions on free to paid, very important for Disney. And they're well on their way to nailing that 230 to 260 million subscribers by 2024. That's the power of Disney Plus. Without Disney Plus, and Disney Plus, guys, launched literally in November of 2019. We're not even a year and a half removed. We've went through a pandemic. Where would Disney be without subscription revenue, without that backdrop of subscription revenue? And when I look at Disney Plus, the sky is the limit for Disney Plus. The sky is literally the limit, wherever that is. It's the moon. They say go to the moon, whatever. Talk all your pot stocks and all your GameStop all you want. Here's Disney, here's Apple, here's Microsoft, here's Amazon, here's Google. Here is the top of the market, showing you the strength of the market, and that is in the revenue and their sales projections, and it has been something to behold this quarter, quite frankly. If these companies, the top of the market, if they were here from a revenue perspective by the end of the year, I would have said that was good. They're here by the end of the quarter. That is even better, obviously. You got to love what Disney did here today. And the only question, I said this in the Facebook group yesterday when I did a Disney write-up, is where's the target on Disney? Where's the opportunity on Disney once we start getting vaccine distribution, consumers start getting confident, and we open up the cruise lines, we open up the theme parks, and we get those amazing princesses back in the movie theaters, because the sky is the limit, the moon, the sun, whatever you want. I loved Disney's report, and it's not a rock star report. It's got its warts, it's got its flaws. There's no doubt about that. But I do believe there's context around that, and the argument of around Disney Plus and that backstop for Disney Sell. That is such a good thing. I love the report.
Mm-hmm. The market obviously is not responding too much here today, but quite frankly, like I told you earlier, that's probably a good thing if you want to trade Disney or you want to enter into a position.
No, you got to let it set up.
Yeah, exactly.
I mean, but I also don't believe you should trade Disney in any capacity. Disney's not a great swing trading stock. No. Disney's a park money in that retirement account, write covered calls, and not worry about things 20 years from now. Disney in 20 years from now is in the eternal great war of 2041, who's going to be the number one company in the world.
Right. It's Amazon, Disney, and GameStop, right? I mean, that's
listen, and Swin, I'm not willing to say how much my family supports Disney's revenue, but it's up there.
It's true.
It's a big number.
There's no question about it. Every time,
Swin, it's bigger than I'm comfortable with.
Every time, you're not supposed to be emotional about trading, Frank, but anytime his wife books a trip to Disney, he goes and trades Disney.
I know he does. He just he figures let's increase the cost of the trip by a little bit more, right?
I'm not a shorter of Disney things, but I have shorted Disney multiple times while I've been sitting on a park bench outside Splash Mountain. So
I believe it.
It did make me feel better. It was a psychological moment. I'm like, if I have to be around all these people right now in this hot sun with all these kids, I'm going to short Disney just because it makes me feel better.
At a principle.
Matt's been complaining about that for 20 some odd years. I believe every word he says.
And I will complain about it for 20 more years.
That's right. Frankie, anything in the chart there grab your attention?
No, like Matty said, you got to let something set up. And I would agree that it is more of a position type of traders or investors instrument. That doesn't mean there can't be some swing trades, but there can be swing trades in anything, right? I think this, I'm of the school of thought that this is more of a, hold long-term company, sell some calls on it when appropriate. if you're looking for a trade, you're still, because hey, just because I think that doesn't mean I'm right. You do need something to set up, right? It's just going to take a little bit of time.
Matt, you had a couple other companies.
And no, I do really like Disney. I've liked Disney for a very long time from a company. I mean, they own the entire world, ladies and gentlemen. I mean, it's really simple, guys. Brand awareness and loyalty to a company is very important as an investor. And when you're looking at the brand loyalty, who owns the world from the time they're born? Not Apple. That doesn't happen until at least 3 when we give them their first iPad. I was joking, Team Tackle, on that one. It's at least 5.
That's right.
And so, but at birth, like, they're watching Disney. And now they're watching Star Wars, or they're watching Marvel, and they have the entire Marvel universe and the entire Star Wars universe. I'm sorry, Disney, there's not a better company with more brand awareness.